the Chinese already recognize they have a dollar problem, the problem being they have too many dollars. And I think they want to divest, and they are doing that. And I think they will continue to do that. And they know they need more gold. And China is buying gold. In fact, China is the largest producer of gold. So that makes it easy for the Chinese government to acquire it because it's being produced within their borders. But they're also importing gold and buying. And that's going to continue. Russia, too. I mean, Russia's already bought a lot of gold. They're going to buy more. Not only is it a bad idea for all these countries to accumulate paper dollars that are just going to lose value through inflation, but they're also risking losing those dollars due to sanctions or losing access to the banking system because the United States decides to impose sanctions because they don't like a particular policy that they pursue. So I don't think any sovereign nation wants to be beholden to another foreign power like that. I don't think China wants to see what happened to Russia happen to it, because there clearly are things that the Chinese might do that we object to. And so I think that they want to own a reserve asset that the United States doesn't control and doesn't have any influence over, and that would be gold. But also, I think the Chinese economy has suffered from its trade relationships with the United States in that they've had these huge trade surpluses with the United States. And, all they've got to show for a lot of these surpluses is a big pile of dollars. And that isn't helping them. What China needs are products, not the products that it produces, but products that other people produce. And what they should be doing with their exports is using them to pay for imports. That would benefit the Chinese people and give them a higher standard of living. But instead, they are exporting what they produce to America, and Americans are not giving them anything that they could use. We're just giving them pieces of paper. Now they got to get rid of those pieces of paper and buy something that they can use. And I think that's what they're going to do. Well, remember, most people in media don't understand this, and so they're not going to pay much attention to it. But yeah, I think it is very significant. I think the petrodollar was key to maintaining the dollar's reserve status, especially in the aftermath of Nixon's default, which is what it was. We owed gold. Federal Reserve notes were promises to pay gold. I mean, that's why they're called a note. It was an IOU from the Federal Reserve, and the holders of those Federal Reserve notes were owed gold. And they expected to be delivered gold at a set rate. And we basically told everybody, you're not getting what we promised to pay you. We default. So people who say America has never defaulted, oh, yes, we did. 1971 was a massive default. But what we did do to try to give value to the dollar, because all of a sudden the dollar that used to be backed by gold was backed by nothing, we did convince Saudi Arabia to start pricing oil in US dollars. And so we told the world, look, we're not going to give you any gold for your dollars, but you can take them to Saudi Arabia. They'll give you oil. It wasn't at a fixed price per barrel, but they would at least accept them, right? That created some demand for dollars, because if you wanted to buy Saudi Arabian oil or OPEC oil, you needed dollars. And so if you didn't have any dollars, and if you didn't have any oil, you could earn dollars through your exports and then take those dollars and buy oil. And so that's what helped give the dollar value. But what's happening right now, and it's pretty obvious, that a lot of the oil exporting countries are trying to get out from under this and are pushing back against the idea of selling their oil in US dollar. And that's just beginning. And I think that is going to continue, that trend, and that ultimately nobody is going to be selling oil in US dollars. I mean, maybe they'll accept dollars, but they'll accept lots of alternatives, whether it's other currencies, whether it's gold, whether it's some kind of a cryptocurrency backed by gold, who knows? But I do think that these exporting countries are going to want to wean themselves off of their dependence on dollars for global trade. And you can already see that that's happening. And so paper money is going to lose the majority of its purchasing power. And so what that means is if you have a lot of this paper money, you need to get rid of it. But that doesn't mean you just go out and spend it and have a party, because then what do you do? So what I want to do is I want to take that paper and I want to use it to acquire real assets while I can. Real assets that are going to stay here, that aren't going to go away. And so what I've been doing for myself and for clients is we buy good dividend-paying stocks, companies that have real assets, real products, plant and equipment, resources, things like that, and that are selling products or services that people need and that they're going to buy even if the price goes up. And they'll stop buying other things to buy those things because that's what they need. So I want to be in the business. I want to own things that people need, and that I can sell them, and I can keep raising their prices to stay even with inflation or stay ahead of inflation. I also own a lot of the resources, the commodities and the raw materials that governments can't print that are going to be a lot more valuable in the future. I also recognize that in a post-US dollar world where the dollar crashes, I think the biggest winners are going to be a lot of the emerging market economies that I think have been held back by the dollar. They have borne the lion's share of the burden of supporting the dollar system. And I think those economies will thrive, and I want to have investments that will benefit from that. So we invest in a lot of these emerging market companies in developed markets that have a lot of customers in emerging markets, and they'll benefit from an increase in purchasing power there. Remember, as America imports less, the goods that America used to buy are going to be bought by somebody, right? So I think a lot of the emerging market consumers are going to be stepping up and getting what Americans can no longer afford. So the businesses that have better pipelines into those markets, I think are what you want to own. And, I would encourage people, if they have money, then you're at risk, especially if you have US dollars, if you have bonds that are denominated in US dollars, you are going to get taxed to death through inflation. But the good news is you can avoid the inflation tax by avoiding owning the currency that's being taxed, because the US government can only tax my dollars with inflation. They can't tax my gold. They can't tax my stocks. They can only tax my dollars. So I minimize the number of dollars I have to avoid the inflation tax. And, we're managing money for people all around the world. And in fact, two of my strategies, my dividend payer strategy and my value strategy, I have replicated in mutual funds that I have made available to Americans, right? They're not available to the international audience, but they're based on my separately managed accounts that are available to people pretty much all over the world. But if you look at the performance, at least the relative performance of my funds, the U.S. News & World Report, it was like maybe a week or two ago, came out with a survey of the top 60 funds in large cap value. They reviewed 350 funds, and they narrowed it down to the top 60. And they looked at those funds over the last year, 3 years, and 5 years, and they put their ranking. And my dividend payers fund was ranked number 1, and my value fund was ranked number 3. Now, somehow there was a Goldman Sachs fund that managed to get in between there. But other than that, I got number 1 and number 3. And the reason that my funds did so well is because of the stock selection. We're buying good companies, real value, and the sector allocation. We're allocating correctly. We're not anywhere near the benchmark. We're very different from our benchmark. And that's the reason we're able to outperform the benchmark by so much. But my strategy really is designed for a weak dollar. So we were able to outperform even with a strong dollar. But if I'm right, and that the dollar turned south, and it looks like it started to turn south in the fourth quarter of last year. So if we do get a persistently weak dollar, which I think we're going to have, in fact, I think the dollar is going to hit a record low, then my strategy should do even better, not only on a relative basis compared to its peers, but on an absolute basis. So I would encourage people, get out of dollars or other currencies that are likely to lose value and build a portfolio that will do well in an inflationary environment, because that's the environment we're going to be living in for the foreseeable future.